Breaking news. America, a game-changing economic relief package, has just cleared a major hurdle in Washington. The House has approved what many are calling a new deal featuring direct payments of $4 to qualifying Americans and an unprecedented $830 monthly boost to Social Security and SSDI recipients. This could be the financial lifeline millions of Americans have been waiting for. I'm breaking down everything you need to know about this massive relief package who qualifies, how to claim your payment, and when the money might hit your bank account. Before we dive into all the details, make sure you hit that subscribe button and turn on notifications so you don't miss any updates on this developing story. The economic landscape in America has been challenging for millions of citizens. Rising inflation, housing costs, and healthcare expenses have stretched many household budgets to the breaking point. Seniors on fixed incomes and disabled Americans have been particularly vulnerable, with many forced to choose between medicine, food, and keeping the lights on. In response to these ongoing economic pressures, lawmakers in the House of Representatives have passed what's being called the American Economic Security Act, a comprehensive relief package with a price tag of nearly $1.2 trillion. The bill passed with bipartisan support after weeks of intense negotiation, marking one of the most significant economic interventions since the original New Deal of the 1930s, or the VID relief packages of 2020-2021. What makes this legislation particularly notable is its direct approach to economic relief, rather than relying solely on trickle-down policies or complex tax incentives. This package prioritizes putting money directly into Americans' pockets through two main mechanisms: one-time direct payments of $4 to $100 to qualifying individuals, and a substantial monthly increase of $834 to Social Security and SSDI benefits. Let's start by breaking down the direct payment program. The $4 to $100 payment is structured as an economic impact payment, similar to the stimulus checks many Americans received during the COVID-19 pandemic. However, there are important eligibility requirements and phase-out thresholds you need to understand. To qualify for the full $4 to $100 payment, individuals must have an adjusted gross income of less than $75,000 based on their most recent tax filing. For married couples filing jointly, the threshold is $150,000. The payment will phase out gradually for those earning above these amounts, with no payments going to individuals earning above $99,000 or couples earning above $198,000. Dependents under 17 are eligible for an additional $1,000 payment, which would be added to their guardian's payment. Adult dependents, including college students and disabled adults claimed on someone else's tax return, are eligible for $1,500 payments, addressing a criticism of previous stimulus programs that excluded these groups. What's particularly significant about this program is that it includes provisions for Americans who don't typically file taxes. If you receive Social Security, Railroad Retirement, SSI, or VA benefits but don't file taxes, you'll automatically receive your payment through the same method you receive your regular benefits, no action required. For everyone else, the IRS will use your 2023 or 2024 tax return information to determine eligibility and send your payment. If you haven't filed taxes recently, the bill establishes a simplified filing portal similar to what was used during the pandemic. The Treasury Department estimates that approximately 85% of American households will qualify for some form of direct payment under this program, with the first payments scheduled to begin processing within 30 days of the bill becoming law. Now let's talk about what might be the most impactful part of this legislation for seniors and disabled Americans: the $834 monthly increase to Social Security and SSDI benefits. This boost represents the largest single increase to these benefits in the program's history. For context, the average monthly Social Security retirement benefit is currently around $1,800, while the average SSDI payment is approximately $1,400. An additional $834 per month would represent a roughly 46% increase for the average retiree and nearly 60% for the average disability recipient. The increase is structured as a supplemental payment rather than a permanent change to the benefit calculation formula. This approach allowed legislators to fast-track the increase without triggering more complex changes to Social Security's long-term funding mechanisms. What's particularly notable about this boost is that it applies across the board to all beneficiaries, regardless of their current benefit amount. This means both the receiving minimum benefits and those at the maximum will see the same dollar increase, which creates a more significant percentage increase for those at the lower end of the spectrum. The legislation also includes provisions to protect this supplemental payment from being counted as income for purposes of determining eligibility for other assistance programs like SNAP, formerly food stamps, Medicaid, or housing assistance. This ensures that vulnerable Americans won't lose access to other critical support systems when they receive this increase. For SSI recipients who face strict asset limits, the bill includes a temporary exemption period during which the additional funds won't count toward resource limits, giving recipients time to spend the money on needed expenses without jeopardizing their benefits. The Social Security Administration estimates that approximately 70 million Americans will receive this monthly boost, including about 50 million retirees and their dependents, 9 million SSDI recipients, and roughly 11 million who receive both Social Security and SSI benefits. Now that the bill has passed the House, it moves to the Senate, where debate is expected to begin next week. Senate leadership has indicated they hope to vote on the legislation within the next 14 days, potentially with some modifications. If passed, the bill would then need to be reconciled with the House version before going to the President for signature. Assuming the bill becomes law in its current form, here's the expected timeline for implementation. Direct payments would begin processing within 30 days of the law's signing, with electronic payments going out first, followed by paper checks and prepaid debit cards. The Treasury Department estimates it could take up to 10 weeks for all eligible Americans to receive their payments. The Social Security and SSDI boost would take a bit longer to implement. The Social Security Administration has stated they would need approximately 60 to 90 days to update their payment systems. The first increased payments would likely go out in the third month following the bill's enactment. However, the legislation includes provisions for retroactive payments, meaning beneficiaries would receive a lump sum covering the increase for any months between the law's enactment and the actual implementation of the higher payments. A question many Americans have is, how is the government paying for this massive economic package? The legislation funds these programs through a combination of approaches. First, the bill introduces a temporary surtax of 3% on individuals with incomes above $5 million annually. This ultra-wealthy tax is expected to generate approximately $420 billion over 5 years. Second, the legislation increases the corporate tax rate from 21% to 25% for companies with annual profits exceeding $100 million, generating an estimated $370 billion. Third, the bill includes provisions to close several tax loopholes, particularly those related to carried interest and real estate investment, adding another $210 billion in revenue. Finally, the remaining funding comes from reallocation of previously appropriated but unspent funds from older programs, along with projected economic growth resulting from increased consumer spending. Proponents argue that by putting money directly into the hands of Americans most likely to spend it immediately on necessities, the program will stimulate the economy from the bottom up, potentially generating enough economic activity to partially offset its costs. Despite passing the House, the bill faces significant challenges in the Senate. Critics have raised several concerns about the legislation. Some fiscal conservatives argue that the package is too expensive and could exacerbate inflation by putting too much money into circulation at once. Economic analysts are divided on this point, with some suggesting that targeted relief to lower and middle-income Americans who will spend on necessities may not have the same inflationary impact as broader stimulus. Others have expressed concern about the temporary nature of the Social Security boost, questioning what happens when the supplemental payment period ends. Advocates counter that the legislation includes a provision for Congress to review and potentially extend the boost before it expires. Some progressive lawmakers have argued that while substantial, the package doesn't go far enough in addressing structural economic inequalities. They've pushed for additional provisions like student loan relief and expanded healthcare subsidies. Business groups have generally opposed the corporate tax increases, warning they could impact job creation and investment. However, several major corporations have broken ranks to support the package, arguing that a stronger middle class creates more customers and a healthier economy overall. Economic analysis of the legislation suggests that several groups would see particularly significant benefits from this package. Retirees living primarily on Social Security would experience an immediate and substantial improvement in their financial situation, with the average monthly benefit increasing by nearly 50%. Many seniors would move above the poverty line and gain greater ability to afford health care, housing, and other necessities. Disabled Americans receiving SSDI face some of the highest poverty rates in the country, with many unable to work and reliant entirely on their benefits. The $834 monthly increase would provide critical relief to this vulnerable population. Working-class families with children would benefit significantly from both the direct payments and potential economic growth stimulated by the package. A family of four with an income below $150,000 could receive more than $10,000 in direct payments. Small businesses in economically disadvantaged communities might see indirect benefits as local residents gain more spending power, potentially increasing sales and allowing for business expansion and hiring. Rural communities, which often have higher percentages of residents receiving Social Security and disability benefits, would see a substantial influx of federal dollars, potentially revitalizing local economies that have struggled in recent decades. While the legislation still needs to pass the Senate and receive the President's signature before becoming law, there are several steps you can take now to prepare. First, make sure your information with the IRS is current. If you've moved since filing your last tax return, you should file Form 8822 to update your address. This ensures any paper check or correspondence reaches you without delay. If you haven't filed taxes recently but might qualify for the direct payment, gather your income documentation now. While the bill includes provisions for non-filers, having your information organized will help if you need to use the simplified filing system. For direct deposit, verify that the bank account on your most recent tax return is still active. If you've closed that account, be prepared to update your information through the IRS portal that will likely be established if the bill passes. Social Security, SSDI, and SSI recipients should ensure their direct deposit information is current with the Social Security Administration. While no action would be required to receive the boost, having accurate payment information will prevent delays. Consider consulting with a financial advisor about how to best use these potential payments, especially if you're receiving a significant boost to your monthly income. Planning ahead can help you maximize the impact of these funds on your financial situation. If you found this breakdown helpful, please give this video a thumbs up and share it with friends or family members who might benefit from this information. Don't forget to subscribe to this channel for ongoing updates as this historic legislation moves forward. I'm committed to bringing you the most accurate and timely information about this potential financial boost. Drop your questions in the comments below. I'll be responding to as many as I can and might create follow-up videos addressing common concerns. Thanks for watching, and stay tuned for updates on this developing story that could put thousands of dollars in your pocket in the coming months.